Today's video is all about LogX, the ultimate DeFi super app. Today we're going to be doing a deep dive into this project, looking into some of the fundamentals such as the utility, the team, the tokenomics, and the overall value proposition, trying to figure out whether this project has what it takes to make it to our portfolio. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunity. And the question is LogX the opportunity? Today, we're doing a deep dive, guys. We'll be looking into some of the fundamentals, looking into some of the opportunities here for this project, and ultimately, if it should make it to our portfolio, looking at some of the details. And we can see that LogX, as we can see by the website, it's pretty well established. We do have some good indications of some interesting details, backed by some good heavyweights, VCs, Coinbase Ventures, and many others. And we'll kind of scrape through this website, taking a retail perspective. Obviously, you guys know I definitely look out for those retailers, those new individuals coming into the space, ensuring that we have every single detail covered going forward, because ultimately the fundamentals matter, especially if you don't know much about this crypto space. So this deep dive is definitely from a retail perspective. And in addition to that, we're going to be using the website. The website is going to be our main platform, and other documentation provided by the team in order to get a good grasp about the project in general. All right, guys, let's kind of scrape through this website and see what we got here. We have perpetual, spot, pre-markets, a leaderboard, and staking. Just by looking at it, of course, in the first 5 seconds, by looking at this website, we know what it's all about. It's a DeFi play, decentralized finance super app. Okay, so that's great. And then we can see that it's backed by some heavyweights here, and we'll talk about those in a little bit. But just seeing Coinbase Ventures, I think that's a really interesting one. Having Gate.io, I'm wondering what that's all about, because really when I do see exchanges, is particularly, not their incubator program or anything like that. If it's just an exchange, it usually means that they are just listed on the exchange. But for some reason, I don't think that's the case. So we'll definitely look into more of that. And there's a few others, right? We see Cumberland and CoinSwitch and many other reputations, or backed by. What does that even mean nowadays, backed by? Regardless, we'll dig through and see what else we can find. Long road ahead, clear roadmap. I appreciate it 100%. At the end of the day, we do know that new projects coming in, LogX is fairly new, have a long road ahead, right? And potentially multiple cycles, right? And this is something that we have to consider, is that if we expect small projects to linger around, we expect it to be able to withstand multiple cycles. And the only really way to achieve that is to have great fundamentals, because during a bear market, we can see a lot of these new projects fizzle away, retrace significantly via price, and things don't look well. But at the end of the day, at least if we have a clear vision, we have a roadmap with clarity and some details, we can definitely get behind it. We see perpetual markets, leverage prediction markets, option markets, pre-markets, and spot markets. All check, which means that these have been achieved. Milestones, major milestones for DeFi. Now they're talking about real world assets, meme coin launchpad. Okay, that's not bad. A little bit of meme coin action here and there is not bad. You guys know that ultimately I'm not a big fan about them, but that's about it. 8 treasury yield, and 9 gaming. Okay, gaming is also an interesting concept, given that it has been, kind of overlooked in the last little while. But I feel like a resurgence should be around the corner very, very soon. Let's keep on going down. A robust architecture, 30,000 TPS, built for fast and efficient derivatives trading. So we've seen a lot of action within the narrative, derivatives trading, but not only that, in a decentralized fashion using a DEX. We've seen these projects come out. You guys know which ones I'm talking about. We've seen them right now dominate this space, and as a hot new narrative, especially with individuals trying to get off centralized exchanges and start trading on a decentralized exchange, we're seeing the trend pick up really hot, and LogX is definitely picking up within that narrative, and I appreciate that. Of course, more competition, more product offerings, more healthy competition, bringing more products, more services, more everything towards the end consumer, which is us, of course, the retail market. 100 millisecond latency, which is good. A latency for rapid order execution and gasless trading. Experience a centralized exchange like trading with zero gas fees on LogX Network. Interesting opportunity here, given the fact that what they're essentially saying is what they want is an experience that does not seem like it's a decentralized crypto application, right? It wants to feel like it's a centralized exchange without friction, without many bells and whistles that deter newcomers from getting or participating, and making it seamless like centralized exchanges do. And that is definitely a value proposition that anybody can get behind. So being a crypto project without feeling crypto is definitely another narrative that a lot of people have been looking for and talking about with regards to development. So that's pretty good for LogX. I like the fact that they're offering, or at least acknowledging that that's an achievement of theirs. State of the art trading, omni chain trading, trade perpetuals across any chain with our shared derivatives. This is interesting. One of their main propositions is that they're chain agnostic. Okay, we'll talk about that a little bit. Obviously, we'll talk about their white paper, but you'll notice that I'm going to be talking about a bit of detail here as we scrape through the website, and there will be some repetition as we go through the white paper. I'm going to do my best not to repeat as much, but look for opportunities with greater depth and detail. Omni-chain trading, okay, so chain agnostic, multiple chains, not focusing on one, and their whole vision is to go where the traders are, to go where the people are, to go where the liquidity is, right? Instead of trying to draw liquidity to a particular chain, a specific chain, or a single chain, what they are trying to do is go where the chains are. And that is essentially their perspective with regards to their architecture. Smart order book, centralized exchange like trading with smart order book and native cross margin, exotic pairs, I guess, simple clicking button trade. Tons of coins out there at the current moment. So if they're going to be able to introduce those projects, so those trading pairs to their decks, I think that's very valid. Self custody, of course, one of the major value propositions of a decentralized exchange is that you can trade with confidence and full control of your assets and your rules. That's one of the reasons why we want to get off of centralized exchanges. So we can see that LogX is bringing real competition to the centralized exchange narrative. Okay, so we've seen many other projects right now, many other decentralized exchanges doing a very similar thing and threatening the bottom line of decentralized exchanges. Okay, so very interesting. Another thing that I really do appreciate when I went through this website is the fact that they use trading view charts. We are all familiar with the TradingView platform. I appreciate that integration. The last thing I like to do as a trader is get used to a whole different platform. TradingView is the standard nowadays here in the crypto space, and I like the fact that they have TradingView full integration there. So that's pretty good. And you can see 100 plus ecosystem partners. Okay, so let's clarify, their partnership aspect here. It's not necessarily a partnership. They're integrations, and no doubt they're free for everybody to integrate. It's not like they have a specific partnership per se. Okay, so let's be clear about that. They're relationships, no doubt, integrations, no doubt, and you can see you got many here, guys. And that's part of their thing. The reality, they want to be chain agnostic, and they want to be by default, they're going to be perhaps even wallet agnostic, but technically speaking, they should have their own wallet as well. And you can see that they have a wallet, many wallet options, opportunities. You connect any wallet and you get going, and that's basically what they want to do, is offer no friction whatsoever, regardless of chain and wallet. They want to have you covered. So for me, that's definitely interesting. DeFi at its best without friction. Let's continue going down. Audited, guys, obviously based on DeFi, we know DeFi is usually a major target for exploit. And because of course that's where all the liquidity is at in the pools and all of that. And here you can see that their contracts have been audited, their code has been audited by three different industry professionals. So this is pretty good that they have that. Check them out if you want to know more about these experts. Feel free to do that. But at least they got they're audited three times by three different individuals, which is good. Staking benefits. So obviously, by you staking, you're gonna always obviously earn rewards. This is industry standard for sure. Surprise meme coin drops, 100% free fee sharing, partner airdrops boosted by APY. So you can get boosted if your APY can get boosted if you're early for early stakeholders, premium rewards and governance rights. This is interesting because you guys know we look for utility for a token. It's not enough just to have a token that's meant for gas, because there is gas. LogX is the gas. It's just that users don't pay the gas fee, right? The gas fee comes out of a treasury or something like that. So that's totally fine, but ultimately there is a gas and there's not enough. There needs to be more utility other than gas. And I'm glad to see that they're saying that there's governance, right? Governance rights, network security rights, and all of that. And obviously the APY capabilities and the rewards and all of this. This is great. This is at least there's use case for the token, okay? And obviously I'm gonna open this up just in case I don't have this already open, which I think I do. I do. We'll just open that again. We'll take a look at tokenomics in a little bit more detail in a second. Some testimonials from various individuals across the space. Go check those out. Latest updates. There's a couple of things. September 2024. This bothers me because the updates are very old. What does that mean? Like, in fact, that's a negative. Like, you shouldn't have this. And I'll talk to you more about their blog and that kind of stuff because there's no point of having this section if you're going to have things that are really old. Like, this is, 2024, almost leading into a year old information. That means that two things: either they're not keeping their website up to date or they're not progressing, which is a problem either way. Obviously, the website being up to date is less of an issue, but still an issue. So it's better not to have it if they're not going to keep up with their blog. And I believe that these are links to the blog's Substack, which we'll talk about in a second. But regardless, here we are. We got the super app. We got 10 million raised to date, which is good. LogX utility token. Here we are. Feel free to go check that out. And they're listed on CoinMarketCap, CoinGecko, Substacks, and YouTube. I'm not sure what they got going on there, but Substacks, again, if you're not keeping it up to date, there's no point of having it. It makes you look bad from a marketing perspective. So it's better just to remove it or get somebody on it within your marketing team to actually keep it alive and looking like it's being used and manned, or else it looks abandoned. You get what I mean? All right, guys. So pretty good. The website is it's solid, pretty clear. Gave you lots of information as a scrape through. Now let's try to go through some of this information on their white paper. Now I do have two of these because I just opened another one. So let me get rid of one so we don't get all confused here. And you can see their documentation. What is a LogX network? I kind of summarized it. The key advantages is that right now they are built on the Arbitrum Orb stack for scalability, the EigenDA for data availability, and Hyperlane Network for cross-chain messaging. Messaging giving it a lot more utility and capabilities on chain. AtLayer for enhanced network construction. So they got a lot of things happening with their with regards to advantages. So unmatched speed, efficiency, interoperability, of course, exceeding the demand of the modern trader. This is what we need, guys. Interoperability. We don't want our liquidity trapped on various networks. That's the reality. We want to be able to trade where we want to trade and how we want to trade, regardless of the network and the chain you're on. And if they were able to do that without, provide without a bridge per se, that's definitely a choke point because we've seen bridges and how they've, behaved in the past. That's not bad. Nonetheless, there are some sophisticated bridges coming out nowadays that are very, very secure. So we're seeing different approaches to interoperability and unlocking liquidity across chain. and that's very good for ecosystem, and their ecosystem is going to be natively massive, given the fact that they're not chain agnostic. It doesn't matter which ecosystem you're on, they're going to be there. So basically, they absorb liquidity across all chains regardless by default. That is an interesting value proposition in itself. So you got to think about it. It is literally like a super app across all networks. So consider that. Now, if we continue going on, I'm going to go through this as quickly and as detailed as possible at the same time. The most comprehensive DeFi super app, of course, as we mentioned, and scalability and efficiency. Barriers between EVM and non-EVM chains ensures frictionless cross-chain liquidity. So this is the thing, is that we've seen EVM chains, behave very well with amongst one another, right? And many, even Cosmos chains using the I think it's called BSI or something like that. The interoperability standards that allow cross chain capabilities. These are great. These are great, obviously, but in this case, frictionless cross chain liquidity and instant cost effective transaction. By continuously innovating, they are expanding beyond trading, so introducing a new financial instrument and features that push boundaries of DeFi accessibility and usability. So it's very interesting, their approach. I've seen chain agnostic projects in the past, but I feel like the way they're approaching it really does have a fighting chance. I'm very interested right now. Commitment to DeFi superiority, okay. The meaning behind LogX, okay. Roadmap, much more important here. Let's see what we got here. Perps, they got all of this, and I feel like what they're really working on right now next is the real world assets. I kind of agree here. I kind of agree. It's a hot narrative. A lot of projects are, this is definitely a layer of DeFi. I would call it a layer of DeFi because it's a slightly higher layer in the sense that now we could even introduce, tokenized physical assets in this case. So it's not just ground level DeFi liquidity based on tokens, and that's about it. Here we are is talking about token liquidity plus or equal to real world assets, the value of a particular asset. And this is DeFi at its best as well. So I like the fact that they're basically integrating the layer on top of what just DeFi is about. So real world assets 100%. The meme coin business, I don't know if it's going to have a sustainable future. I would say yeah, I don't know. Maybe that's not the best choice at the current moment, or maybe it is. I don't know. Treasury yield and gaming. These are obviously much more interesting to me, being a very conservative individual and seeing how much pain meme coins has caused to the space and to individuals altogether. I feel like maybe this could be shifted depending on. And again, you got to be fluid. You got to be fluid. You got to see where the market is going and the cues that the market is giving. And if meme coins are where it's at, who am I to say otherwise, right? So here we are. This is their idea, and I appreciate the fact that they have a clear vision, but I would also appreciate a time frame. I'm not saying daily, monthly, even weekly. Give us quarterly time frames. What are we trying to achieve within the next quarter or so? In the quarter after that. And that gives us an idea to, basically expect where our capital's going to be best suited. If we want to buy LogX and we want to accumulate some tokens and all of this, we at least we know where the team is pushing in which direction. So quarterly, objectives is at best the best thing that we could expect from the team. So a little bit more detail here, of course. And let's see what else we got. Let's see if I can continue on here. Available products, perps. We talked about this. Coming soon. We talked about this. I'm not going to get into too much there. The white paper, the abstract, pioneers. I like this because it gives you a little bit more detail. Lack of high performance. This is the reason why they're coming out with this. This is their motive. This is their why a log X is needed. So lack of high performance on-chain trading infrastructure. We've seen some come out. So they're coming spearheading the competition. There is a first mover already, and we're trying to see if they can come up up, runner up, or maybe even overtake the first mover. It's so young, this whole narrative, that at the end of the day, there's no real reason why LogX can't do very well and keep up with competition, even if they had a head start. So that's what I'm thinking. Let's see, 99% of the volume locked in centralized exchanges. I could see that. To be honest, the convenience of centralized exchanges have been too great. They babied us for so long. It's time that we offer solutions like this. Liquidity fragmentation across networks. This is a great wording. What is meant by here is that each chain locks its own liquidity, and it's hard to take that liquidity off that chain and go trade on a different chain. Like, for example, if you're on BNB chain or Binance chain, and all of a sudden you want to go and trade on Solana, for example, to make it extreme, it's very difficult. You need a bridge, you need this, you need that. Whereas in this case, it makes it easy, right? So it doesn't matter which chain you're on. They're trying to, make the liquidity less fragmented across chains. High gas fees and execution latency. So they're removing the gas fees, right? So we don't have to pay them. And execution latency, which, I mean, the speed in itself, we know that DEXs aren't the fastest, right? Obviously liquidity issues and so on, obviously, get introduced, and that usually adds to the speed issue. But nonetheless, latency is also an issue. So at least they're trying to deal with that. Tedious wallet signing and poor user experience. This is interesting. So you're not going to have to do wallet signing. And their structure and their design, their engineering allows a very healthy user experience. Like I said, almost like you're trading on a centralized exchange. No seamless consumer grade apps. So interesting stuff, because they're trying to have a seamless consumer grade experience, not just an app. Okay, so this is cool. Let's keep on going on. We already talked about the speed and the latency, deep liquidity from Binance, Coinbase, and this is interesting as well. They're be able to tap into the liquidity of these three exchanges, APY. That is interesting, interesting, interesting. Tight. Through their API, they were able to achieve a lot here. Tight spreads and minimal slippage, cross-chain compatibility, EVM and non-EVM networks. I'm interested to see which chains they are focusing on next. Like, when am I going to see cross-chain capabilities across EVM and, for example, Solana? That is something that I haven't really seen with strength. So that's a first mover scenario as well. If they can achieve that seamlessly, I think that's a very healthy thing. Centralized exchange like gasless, one click experience, again, repetition, and that's about it here, guys. So we're getting a great amount of information, and at the same time getting a great amount of confidence about what they're trying to achieve here. And you can see that nicely defined here in this white paper. One of the best documentations that I have seen in a great while here in the crypto space. As you guys know, I do lots of deep dives every single week, and I'm able to, critique not only the projects themselves, but also the way they present themselves to the customer as a package. And right now, this is doing pretty good. Ultimate DeFi Super App. So a little bit more here, more repetition. I'm not going to get into it, guys. We've talked about this already. Architecture, let's see, cross-chain, gasless, session keys. This is where things get interesting. The integration of account abstraction masks the complexities of underlying blockchain processes. We leverage session keys to open and close trades. This enhancement allows users to place trades without the need to provide or sign transactions. Okay, so this is the streamlining that they've been talking about, and that I've been talking about here. They're literally trying to make it like a centralized exchange. Now, I'm not too familiar with the tech, and I'm not going to get into too much detail with regards to tech here, because this is not a tech review. It is definitely a crypto project, Web3 crypto project review. So we're going to try to keep it Web3 here. But ultimately, if you're getting into the tech and you're a dev and you really want to know more, guys, I encourage getting into that depth of detail to see how this whole concept applies. Token agnostic, we talked about that. Seamless smart wallets, talked about truly omni-chain, we talked about that. Architecture to support any asset type. That's where they're going with this, even with the real world assets, gaming. I'm curious to see how this goes. And there was a word, spots, options, architecture design, scale, broad range, asset very soon. There was a word that they've used in the past that I appreciated. Let me see if I can find it again. But nonetheless, you can see capital efficiency, exotic trading market. So they need to have those trading pairs, guys. For me, that's the biggest problem. They need to be pumping out trading pairs. This is why some of these centralized exchanges do so well, and all degens love them because you get all those trading pairs that we're looking for all the time. They're always there. So hopefully we can get all of them ready to go here. And that's about it. Abundant liquidity. We are collaborating with multiple market makers, all whom are providing liquidity to the base LogX network. I would like to see more about that. Mobile friendly. That's also very, very important. You can see there's a lot here, guys. Tons of stuff. You could be reading this white paper all day long. Very good. Network is also designed to incorporate multiple utilities. Okay, this is where we talked about utilities and so on, of LogX. Okay, so functionality to the user and engagement. Let's see what else we got. Risk. Okay, so obviously L1 risk, and there's the Oracle risk, the manipulation risk. Is that there? They address all of it, guys. The L1 operates a multi-EVM compatible L1 and L2 networks. These networks may experience downtime. You can read it all here. They're so transparent about all the possibilities here, right? They're not leaving anything out, which is great. Fair play rewards, and their audits are here, their reports, and their time, their date. You can even download the reports right here. They're ready to download. Okay, so I've never seen this much, especially for such a young project, this amount of detail, guys. And by the way, this is not a sponsored deep dive whatsoever. Okay, so I'm just being, trying to be open and transparent with you guys. This is decent documentation where you can continue doing your research. There's guides, there's a lot more here. Let's talk about tokenomics here for a second. So this is where things can get a little bit hectic because you start looking at, tokenomics. You see the networks, Arbitrum, Ethereum, Base, Solana, much more coming soon. We've talked about that. But what's more important is the amount of tokens they have. Now, for the average individual that's coming into the space, they're going to see 1 billion tokens, and that's quite a bit, right? And they're saying, okay, that means that there's a huge amount that eventually need to get into circulation. Well, let's talk about this. There's 130 million tokens already in circulation at TGE. Okay, so that's pretty good. But still, there's still a lot of tokens. But you have to understand the amount of tokens across all those chains means that they are going to get absorbed, right? They're going to be distributed over multiple chains. So it's not necessarily a negative thing. You just have to understand that each unit, has to have utility and has to have value. And the value proposition on a LogX has to support all those tokens. Now, again, let's see what kind of value they provide. Let's see what we got here. Utility, governance, and this is ideal. So what they probably thought, the person that wrote this white paper already speculated exactly what a person was going to think about those tokens. So many tokens. How can we have so many tokens? Well, this is why. LogX has utility. They're going to have governance. It's going to be used as gas fee, partnered airdrops, boosted trading rewards, early access, obviously for staking and the various features. You're going to get APY and so on and so forth. But not only a LogX, but this is a thing that's going to be basically used. LogX is going to be used as the main driver across multiple chains. This is the interesting part. So you're going to need a ton of tokens if this thing's going to succeed. You're going to need them. They will get absorbed across all the markets, right? So very interesting. Governance, at this current moment, I hope to see the DAO flourish. At this current moment, I couldn't really see much about the DAO, so that's that. But that's usually the case with small projects. Eventually, they come out with the DAO and they get that going. Revenue share, you can see net revenue share with LogX stakers. Basically, whatever revenue they make, they share it. So it's not a gas scenario. And the fees, transaction fees, get shared with LogX stakers, and the LogX stakers essentially get a portion, and the other portion potentially goes towards some sort of let's put it this way, a pool where eventually that's being used for paying for the gas fees. Because how else are you going to pay gas fees if they're free? Literally, if the end user is not using, paying them, who's paying them? They got to be paid from somewhere, right? Where the token's coming from? Well, it's most likely it's going to be from this. They're going to earn some revenue. They're going to be pooled up into a some sort of fund. The fund will pay the gas fee, and therefore the end consumer doesn't have to pay them, right? So pretty self-explanatory, very interesting approach. As long as they're earning revenue, everything is fine, right? So airdrops, again, I'm not going to get into all of this, but you can see their contract addresses, guys. They're here, transparent. You want to know what how much the liquidity that's locked up in the contracts, go check them out. They're here. There's no guesswork, none whatsoever, and I appreciate that. You guys know I do a lot of deep dives, and sometimes I'm guessing so much, which is so unfortunate. In this case, this is not. You have it listed here in black and white, literally. Let's talk about distribution. So the allocation, can be, a little bit heavy, but again, it's new. So let's talk about this. 70% goes to investors and advisors. Okay, so that's quite a bit, right? We're talking about early stakeholders. 15% for foundation. That usually is allocated to a DAO, and that's what I'm hoping to see. 15% allocated to the DAO. Right now, the foundation, usually early projects foundation, is led by the team. Okay, obviously getting it off the ground, sometimes you just need quick decision making. You can't really get a whole DAO infrastructure going at the beginning, beginning stages. Let's see. We'll talk more about DAO and all of that in a second. 60% to core contributors. So here we're talking about the team, the initial development team. They're going to get 16%. I couple that up into early stakeholders. So 17 plus 16. Why? Because these individuals are early here in the game with LogX. They're probably getting tokens at the same time, because investors and advisors, what they're providing is capital, right? And core contributors, they're also providing capital, but it's human capital, right? So it's different capital, but still capital in itself, and they both want to get paid. And that's the fact. And they're early to the stage of LogX. So I couple those up. Then we go airdrop. Airdrop season one. Luckily, those are already in distribution. So there's no real risk of future dilution. I have a feeling they've already diluted. They have already been sold off on the market, given the price has been falling. So we'll talk about the chart and so on in a second, but it's a good thing to see that at least the price fell, and now we might be potentially in a floor price scenario where the early airdrop in season one has been sold off and people took profits. That's fine. Get them out of the way. Let's redistribute those tokens to long-term investors and long-term holders, and that way we have less risk of dilution. And the only individuals that we worry about is, again, the investors, advisors, and core contributors that are definitely going to be behind a vesting schedule, which we'll talk about in a second. And we can also see that future community rewards 40%, which means that they're supporting the community and ecosystem growth. I'm curious to see how that gets applied going forward. Is it going to be backed by the DAO? Is it going to be governed by the DAO? Who's going to be allocating these rewards? Is it going to be purely based on staking, APY, and so on, airdrops? A little bit more detail there. And of course, a complete DAO integration would be great, obviously. Decentralize the authority over that. And the details, guys, like the airdrop already happened, so we can get over that one. And the foundation, 15%, 4% total of LogX supply will be made available at TGE. So they already got about 4%. Again, more risk of dilution that already happened. Remaining 11% of the tokens will be locked up for 6-month period, followed by a 36-month linear vesting period. So essentially, the foundation is going to get a few tokens over the next years. Okay, so and we'll look at the chart in a second to see how that looks with regards to distribution. Future community rewards. So this is more interesting to me, because this is where ambiguity can be raised. Rewards will also include providing 100% subsidy for gasless experience. So this is important because ultimately this is who pays the gas. It's the future community rewards. Future trading and staking boost rewards. to enhance participation and increase both volumes and fees across LogX ecosystem. So fees and this pool of capital is going to be used to pay the gas so that the end users do not. LogX has pioneered the infinite liquidity model, sourcing liquidity from centralized exchanges to ensure a seamless trading experience. Rewards will be provided to solvers to offer competitive liquidity quotes. Community allocation will be distributed across the span of 80 months. Okay, we'll talk about this more in a second when I go over this chart. Investors and advisors, 70%, as you can see, they have their vesting schedule locked for 6 months, and the team is very similar. Portion of the token supply is reserved for core contributors. Obviously, they're working, they got to get paid, and the engineers and the business development and all of that. Okay, so no log X will be unlocked at TGA for the core contributors. Core contributor tokens are subject to a 6 month lockup period. So we can see that technically speaking, they've taken a very traditional approach to tokenomics, but a very fair approach with regards to reimbursing the community. Okay, so I appreciate that by releasing tokens to the community gradually, and you can see the real ramp up happens very very soon. Okay, so I'm going to show you another tokenomics schedule in a second. But you can see we start ramping up very soon, and the future community, we're going to start to see a lot more tokens entering circulation through community efforts, which for me is not a bad thing because ultimately it's the community that drives the whole network. The utility, the volume, the participation, that's through community. And without community, there's no transactions. And if there's no transactions, there's no rewards, there's no revenue. Okay, so this is how they're going to, let's call it this way, grease the gears so they can get some revenue happening. So we got to appreciate that one. And there's this documentation here also that kind of repeats a little bit here. I'm just showing you this because they also call this a white paper, and you can see their mission, their acknowledgments, executive summary, and so on. There's some little details here, why LogX Network, and so on. And feel free to check that out because they got lots of good achievements, and you can see a lot of EVM compatible chains, including Solana is also here, and so many others, and so many much good reading here. So feel free to check out this document. It's a lot more depth with just explanations and so on, but a bit of repetition as well. Now, let's move on. Let's continue with the tokenomics. I told you that I was going to show you a chart, and this is provided by CryptoRank, and you can see that now we're seeing a bit of a ramp up. We're going to see a ramp up of token distribution, guys, and it's not the worst time to see this happen, but it is a hectic one because if we start to see a market that starts to trend with strength in the next little while, it is very likely that we're going to see a massive, massive retracement in a bear market. And this happens a lot. We have to understand that altcoins retrace 95%. Some of them even don't even return, they come down to zero, right? I'm not saying that's the case for LogX. What I'm just saying is that all these unlocks and all this emission for the remainder of this bull cycle, quote unquote bull cycle, meaning that we're still waiting for the rest of it with regards to alt season, is likely to be sold off once we reach signals of a top, and the retracement will be heavy. So what I'm trying to say here, no matter how bullish you are, and know how bullish I am, no matter what, you're going to have a plan to take profit because a lot of people will be getting a lot of tokens in the next little while, and depending on how far we go into this season, it could be as deep as maybe end of the beginning of next year, maybe first quarter. That's very possible. And we could see a lot more tokens enter, and that means we run risk of dilution, and we continue throughout a bear market getting more dilution, and it's very likely by the next cycle that's when we start to see a flattening off. So be very very careful here in the next little while with regards to tokenomics, because although the project is young and although the project is interesting, we're going to see a lot of distribution in the next little while. So now that we have the hype and the energy to see bull market price action, ensure that when the bear market comes in, and I know it's hard to catch, but when we see signs of a bear market, guys, take those profits. Okay, and will reaccumulate when it finds its floor price in a bear market. All right, so that's that. Let's see if this website gives us any more. Not really. A little bit of fundraising. Let's see what we got. What logos we have here. I like to look at these sometimes. It's a little bit slow here on the website. In the meantime, oh, right here we got some vesting. What do we got? So of course, Coinbase Ventures. We got Peak, MSA, Amplify Better. Okay, DWF. These are investors. Yeah, we got a couple of Cumberland. These are Wagme Ventures. A couple of known Gate. Okay, that's interesting that they're actually investors. Okay, so pretty cool here, guys. There's some obviously with Coinbase Ventures is it's enough. That's a pretty good established you know um commitment that they got going on there. So that's pretty good. Let's take a look at their socials. Now, as I mentioned before, socials are important, particularly with new projects, especially now. Because if we're going to be picking up steam in this altcoin market, pumpamentals are much more important than even fundamentals, to be honest. But this is what we got. We can see that we have a newsletter that is unmanned at the current moment. It seems abandoned. Unfortunate, because they got a lot to say, and they should have a lot to say. Why? Because they're in the building phase, and right now, to be honest, they're in the selling phase. They need to sell their idea, and this is an opportunity to sell what they have built. And unfortunately, they're not using it to their advantage. It seems a little abandoned at the current moment, unfortunately. I would love to see a little bit more action here, and it gives them the opportunity to rank better on Google Trends and all this other stuff on socials by providing more links and backlinks and all of that. If you go on their X is doing okay. They have 236,000 followers. Given the amount of followers, I expected a lot more engagement on their posts. Okay, at 31 likes, that's not enough for me. This is their link, their pin one, so obviously it's gonna have a few. But if you keep on going down 16, like that's not a lot. Only 3 retweets, that's not happening. 2 likes, like we gotta have, given the amount of followers, guys, they should have a lot more action on their socials. That kind of bothers me. So what's important that is that they organically accumulate followers and engagement on their socials, organic, because that's the way they're going to get sustainability and real true price not price action, but true action on their socials. They need that engagement. Okay, so that's that. Let's take a look at the team quick. They got a few team members here listed on LinkedIn. About 31 associate members are signed up here. They seem to all be from the region of India. So the team is obviously in an up and coming place of the world where there's a lot of development happening in blockchain and Web3, which is interesting as well. And you got a lot of talent here, got a lot of young talent. And we'll take a look at what the founders are all about here. This is, I think, the face. I've seen some of his podcasts or some of his interviews. Very well spoken. He understands what he's talking about. He knows his product. He knows his service. He knows what he's building, which is great. And I started to look into him a little bit, and I don't see like he sees it's the co-founder, obviously presently for the last three years, the co-founder of LogX, which is cool. But I'm trying to look into where his real passion is and where his experience lies. And I'm seeing Creed full time product and business. Okay, I see he's a tech guy. No doubt he's a tech guy. Automated the onboarding experience of key customers like Microsoft. More tech, product development, tech, product development, tech, startup, student startup exposure program. He's a young dude, no doubt. Education, technology and science, dual degree. Again, it seems like a very business tech individual. Okay, does he have a computer science degree? Doesn't seem like it. Is he a developer? It doesn't seem like it. Is he an engineer? Doesn't seem like it. But business slash tech, I think he's got us covered there. Let's keep on going. Co-founder LogX. So another co-founder here. Let's scroll down. Another experience Cred. I'm not sure what that's all about, but that's all we really got at the current moment. And we have technology and science, the same degree. It seems it looks like they met at the same school, and that's all you really got. So general technology degree type of scenario. Hyperloop, Conquest. Okay. I'm curious about this creed. What is it? I'm just gonna quickly jump into that. Financial services. Okay, that's not bad. Financial services, at least a little bit of a finance background, and they both have that. Both founders have that at the current moment. It seems to be a big thing. So a little bit of a finance background, business tech. Looks like they're right in the right field considering DeFi. And then we have this individual's. He's the full stack developer. Okay, so this is where the actual tech, as far as the development team goes. Full time Bits blockchain co founder of this, played a key role in founding team member of web developer, okay, marketing solution, influencers, and cryptocurrency blog writer. Okay. And then he moved on to do a little bit of tech here, went into here for a couple of years. Okay, which is okay. Still very young, very individual, young in his career, it seems. Young team, hustle, same school, it looks like. So it looks like they're all coming from the same institution, and looking for a fresh startup here. And then a log engineering. Okay, Manu's an engineer in different university, it looks. And let's see what he's got for us. Fellow software development engineer. This is where we're at. More software development engineer, JavaScript, React, JS. This is what we're talking about. So at least someone that knows the language. That's what we, at least somebody that knows the engineering as far as engineering for a computer, okay, and in a virtual machine. Okay, so this is great. Okay, let's move on. And then building LogX, product web 3. I'm not sure what he's got going on. Product manager. He looks like more a visual engineer, designer. He's a designer, front end looks like, and marketing and stuff like that. So pretty good overall. The team is young. I can tell this team is very very young. It's not like they have a big background and they're coming out fresh and hot with a very aggressive objectives. And you know what? It seems like they know what they're doing. Okay, we have to give a little bit of credit for young teams because they all start somewhere, and sometimes the youth and the fresh new ideas are the ones that come up with the best ideas. All right, guys. So that concludes. You guys know that I do provide a infographic summarizing my ideas here, and of course I'm going to post this all over socials, and you can get that on my X account, YouTube, and Discord, and all the rest. Let's talk about this real quick summary here. Ecosystem. I like its ecosystem. So across chains services, liquidity aggregation, multi-chain. I say the way they're building their ecosystem, especially with the agnostic aspect, there's a lot happening there. There's tons happening. And because of that, I can see there is still their ecosystem becoming a very robust one. Without that friction, it could definitely attract a lot of utility. And speaking of utility, governance, ecosystem airdrops, boosted trading rewards, a 100% net fee share, premium features, and gas fee. That's basically what it's used for. We're waiting a little bit more with regards to governance. Okay, that's my biggest concern at the current moment because that will represent quite a bit. Roadmap: full launch of multi-product DeFi super app, including exotic derivatives, real-world assets, gaming, treasury yield. So there's no timing based on this. That's one of my issues. And I think a lot of this is still in development and still kind of like in beta, and because there's no timing, I don't know exactly where they're at with things, and that would be a benefit. And it doesn't have to be again with so much detail, daily, weekly, monthly. At least give us a quarterly update as to know where, or quarterly heads up as to where things are going. That's it. 6 out of 10 for that. At least they given us some detail though. But without timing, a roadmap is very difficult. The team is a young team. And of course, when the team is so young, there's speculation. And when there's speculation, by default, by its definition, there's uncertainty. We got to be real about that. So as we we found a dream team that nobody knows about, it's possible, but it's still risky because we don't know, right? And at the end of the day, they have a general tech background, which is good. And they do have a team that has some Web3 talent and development talent, but they're very, very young. And this is a little bit of a concern. They're very young, not only by age, because I can see they seem very young by age, but also based on their career. Okay, so we have to understand that. That based on that, it's either we look at it as an opportunity because maybe we found a great team that is going to crank out, and its future value of the team is actually 10 out of 10. Well, let's see where they go with things, right? So maybe we are thinking of them undervalued based on that. Their socials, unfortunately, I was able to go on their socials, but I wasn't able to get much happening there. Okay, so let's talk about this again. I showed you their X. They're not much engagement, very low engagement on their posts. That's concerning, given that they have 230,000 followers. Okay, that shouldn't be the case. It's either their followers are bot or they're not organic, or I don't know what's going on, but they don't have much engagement there, unfortunately. Telegram is announcement only, a big problem because DGens loves Telegram. Discord, no team presence. I asked the question in there and nobody responded for days. So really there's a problem there, right? So they need to have somebody somewhere on one of the most common platforms out there, which is right now Telegram and Discord. Again, my opinion is Discord is much better. It's much more sustainable. It's much more high quality. You can have high quality engagement and distribute a lot more information effectively on Discord, right? But if you're not going to have either or, there's a problem there. And the blog is abandoned. It has been abandoned for almost a year now. So there's a bit of a problem there with their socials. They need a marketing guy. They need something. Even though their white papers and everything, their documentation website is on point, who's behind their other communications? There's got to be somebody there on their socials doing something. So unfortunately, there's a lot of improvement there. Tokenomics is pretty good. I have to understand. We have to understand what we're talking about here. This is a very small market cap project. Let's just quickly look at the market cap because I forget what it is exactly. It's a $2.5 million market cap, guys. Okay, just pause here for a second and just reflect on what I just said because it's a very, very small project. So these numbers, obviously, everything that I'm talking about is still in a layer, a thick layer of speculation, and based on its market cap and its size and its stage of in its life and its product life cycle, we have to understand that its tokenomics are decent based on where it's at. There's a lot of tokens that need to be issued. We know that because it's new. Guys, this just hear me out here. But at the end of the day, we know that 40% is going to eventually run through the community. Early airdrop has already out there, so there's no risk of that dilution. Early stakeholders represent 33%, but they are behind the clear vesting schedule. So we just have to know that we are dealing with what we're dealing with. And based on that, in its current phase, 8 out of 10, it's not bad. At least they're doing it a safe way as best as they can. I can see they put a little bit of effort there. Hopefully it works out. The relationships are interesting. Okay, they got Coinbase, like I mentioned, DWF Labs, Gate IO, and some others, WagMe, and a few others. Lots of good relationships and a very interesting ones for that matter. So 9 out of 10 right there. And exchanges at this current moment, they got Mexi, CoinX, KuCoin, Gate, and a few others, but very low liquidity exchanges. Not much happening, but it's very normal. It's very acceptable. I wouldn't be surprised if this thing gets listed on Coinbase, given that it is involved with Coinbase Ventures. Usually that's the case. Okay, think about it as a scouting program for Coinbase. Usually it is the case, it gets listed. So think of this as an opportunity for future exchange listings. A low rating here could eventually become a positive if you think about it. Okay, so that's that. Now, again, I just want to make it very, very clear that this is a very speculative project given its market cap. None of what I'm saying here is an endorsement or anything. I'm just trying to break it down so that you can see where the good, the bad, and the ugly is. And ultimately, their trading volume is decent, 6.5% of their total market cap. Supply is 26% out there, which, of course, like I mentioned, more needs to be in distribution. And based on the timing, the price is in the pennies, in less than a penny, as you can see. But this is where we're at. Okay, so FDV, $10 million, $9.5 million. There's a lot of work that needs to be done with regards to emissions. Now let's quickly look at my verdict. Okay, just to give you a quick summary here. Whoa, let's see if I can get back to where I was. There we go. Without distorting the screen here. All right, and we can talk about the DeFi aspect of things. It is a DeFi, chain agnostic and modular. Okay, so for me, that's interesting. We talked about that. Initial circulating supply, 130,000 LogX was already issued at TGE, so no risk of dilution there. That was the airdrop. Foundation will fund ecosystem growth. Okay, that's important. And the foundation, part of the pool comes to pay off those exchange, the gas. So that way, the end consumer does not have to pay gas, which is good. Nine uh, 9.5 months since launch, and ramp up begins now. So they're fairly young. They're only been around for about 9.5 months since launch, since TGE. So, you can see that the tokens now get ramped up based on their vesting schedule. We start to see a little bit more enter circulation soon. Um, some utility still needs to be released as expected, but again, without a proper roadmap, with timing, it's hard to really judge when. Cross-chain services built on Arbitrum, Orbit, Alt Layer, Hyperlane, Eigenlayer for data availability and messaging. Liquidity aggregation connects to centralized exchanges like Binance, Coinbase, OKX, Gate, etc. Partnered platforms integrates with 100 chains, wallets, dApps, and we've talked about this, many integrations with many different tools and utilities across the space that are integrated in DeFi. Okay, this is important. More non-EVM integrations would be beneficial and interesting to see, and I'm curious to see when those get integrated. Roadmap again included timeframes. Again, I'm repeating myself. Sorry about that, guys. Let's continue going on. Again, this is not a, I'm not a fortune teller. I don't know where things are gonna go. And again, you're probably seeing that number. You're probably saying, Mike, 44x. But what can I say? Even if LogX hits $100 million market cap, which we know, guys, is still a small market cap. Okay, it's not a huge one. I'm trying to be as modest as possible. It jumps to 44x. What can I say? Right? And okay, let's be more modest. The price projection being 30 cents. What does that become? Like 35, 40x or something like that? It's still a lot. And this is the benefit and this is the craziness behind the small micro cap altcoins with some decent fundamentals. They could do very well, especially with lucrative narratives such as DeFi. And for this reason, I'm like, it's not bad of a project. I give it 7 out of 10, but I understand the speculation aspect here is that it's a small market cap, it's a very small project, and it's very volatile. And at the end of the day, if it does well, guys, it's gonna do well. And I give it a 7 out of 10 based on this. Based on these ideas. Okay, guys. So that's that. Just as a reminder, I'm going to be posting this on the socials if you want to use it as a cheat sheet or as a reminder in the future. And as per usual, guys, I look at charts. So let's take a look at that. At the end of the day, we want to know what is LogX doing. Price action wise, it's been doing pretty bad. I'll be honest. Okay, so we talked about this trendline liquidity a while back. I've been getting requests on this project on the live streams, because I go live every single day, and people request, and somebody requested this one in the past. And trendline liquidity is not something I mess around with. When you see these types of structures like this, I'm worried about trendline liquidity getting swept, and we got swept big time. Now I can imagine what happened here. All that, airdrop and all the tokens being released, the early airdroppers, those guys took profit and sold off, and here we are. We're at a point of control at the current moment. We're at a level of which we are going sideways, and then the question is, do we hold this level? To be honest, your invalidation is now. If we start breaking below here, guys, we're coming down for another dip, and I don't know when we're going to stop dipping. This is my biggest issue. We can start using Fibonacci extensions from swing low to swing high, and we can start looking at 1.27s coming down to about 0.0069, something like that, and coming down to the 1.618, multiple zeros, 300, something like that, and that's another level that we can come down to. All very possible. However, if you look at what's happening right now, this is your invalidation. We break below this wick. Again, how much lower we go is up to you and your risk tolerance. Get out, because we're falling, guys. There's no market structure here suggesting reversal yet. This was a dead cat bounce, especially if it confirms a lower low here, guys. It's a dead cat bounce confirmed. Trend is your friend. We're coming down further, and sell pressure is on. You can see the volume. It's thick. It's not like, and it's very coordinated volume. It's not like it's quick spikes up and down, up and down. This is very thick, coordinated volume. Okay, as you can see. Let's take a look at oscillators real quick to see if we can catch an edge. We're oversold finally, and we're looking at the daily. You can see the expansion is still very hot and very red. And at the end of the day, we could continue to the downside given the fact that the momentum is still coming down. Purple line is still getting oversold. No signs of Class A bullish divergence, Class B or C, or any divergence for that matter, which kind of is bothersome. So we're kind of like really early with regards to finding a pivot point structure in market structure, right? In price action. At the end of the day, we're getting some signs of bullish divergence here, which is great. Trend oscillator, Class A bullish divergence is all into here. Price action is going sideways, so maybe we can classify this as it is Class A. If you look at right, this is downward sloping price action for sure. Is diverging regardless, whether you want to call it Class A, Class C, doesn't matter. It is diverging, which is looking good. We're not in the bullish control zone yet, but we could get there very soon. So this is one of my concerns, is that as we were trending upwards from here, we trend, price keeps on falling, we're trending upwards, slowly trying to get into the bullish control zone. And eventually that happens, we start popping to the upside. This starts, reversing and going to the upside, and we caught a bottom. The thing is, the market structure is not suggesting that's the case. We're still making lower lows and lower highs. Trading oscillators is difficult, guys. Okay, so you shouldn't be trading oscillators. You should be looking at market structure in conjunction or in confluence with the oscillator. So as of now, guys, if you're FOMOing in, if you appreciate the project, you like the fundamentals, buy a little bit, accumulate and nice and slowly as you see market structure giving you indications of a reversal. There is none right now. It is a very small market cap project. It's a risk on asset at its maximum. So what that means is that when the market doesn't look great, it sells off harder than others. But when the market looks amazing, this thing will crank and it will pump hard because it's a small market cap. It doesn't take a lot of liquidity for it to double, for it to triple and quadruple, and you get what I mean. It's all based on market cap, okay? And the market cap introduces and explains its volatility. All right, guys, if I've offered you any value in this video, do the channel a massive favor. Slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. And if you want to participate in the next deep dive and vote on my next deep dive, the Discord is where it's at. That's where you'll get that access. Take care, guys. Have a good one. And don't forget, buy the dip. Thank you.